Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Today is Friday, the 19th of September. Today, I've been left unsupervised. My partner left me for the weekend to go to a wedding in Vancouver, and she left me here all by myself, which means I actually got a lot of work done today. I got my report issued early, and that means that I had some time to make a video today. We don't always make videos on Friday in case we don't have enough time after the report writing. But today, took it easy. Actually, even enjoyed some IPA from this brewery in Regina, Saskatchewan, called Rebellion Brewery. Never heard of them before. Trying to support the barley market here on this weekend where I am a bachelor. So, yeah, that's what I'm enjoying today. I've also been listening to loud music. My daughter and I are going to the Corn concert next week as it rolls through Winnipeg here. So I've been listening to loud music and having a beverage at the end of the day. Again, this is Rebellion Brewing. I don't know if they malt their own barley or not. I There isn't a whole lot of it about them on the About Us page, but I always like to support local breweries and local businesses. So if you know anybody who works there, or you maybe buy there yourself, maybe you supply them with some barley. I don't know where they get their malt from. Worth checking out. Very, very good. Very good beer. All right, let's get into what happens in the markets today. We saw canola down $5.30 to close at 618.60. Minneapolis wheat was down 4.25 cents today at 571.25. Kansas wheat was down 2.75 to 511.25. Chicago wheat down 1.75 to 525. Soybeans were down 12 cents today. Pretty big drop in soybeans today at 1038.50 is where they finished off today. Very small gains in corn, up quarter cent at 424. Bean oil was down half a cent at 51.17. Canadian dollar was up marginally at 72.58. Cattle market was a little mixed today. Live was up $1.20 to 232.70. 100-weight and feeder cattle were down about a buck to 357.85. Also, just to kind of outlay what happened this week, we saw some larger losses after they accumulated through the week in the oilseeds complex. Canola finished the week off from last week, $21.10 a ton down. Soybeans 20.75 cents down, with soybean oil being 1.5 cents down. So definitely the market didn't like the oilseeds complex as much this week. We do dive into that. So that graph, by the way, is available in our weekly reports that we send out every Friday, or at least at the end of the week. Our report this week, we put some very detailed S&Ds after the recent Statistics Canada releases in this report. We talk a little bit about the U.S. soybean problem as well. So, there's more and more folks that are subscribing to our premium content every week. You should be one of them. Go to CanadianAgMarkets.com/subscribe to get all of our premium information, not just these videos where you get to see my lovely face. All right, let's get into what happened in soybeans today. I think the big headline today in soybeans was the meeting between President Trump and President Xi. It was initially meant to make progress on the purchase of TikTok, or the divestiture of TikTok for the US. But I think the market was hoping that there would be some deeper trade talks happening. I think that kind of got kicked down the road. There is going to be some talks on October 31st in South Korea, although that's at an economic cooperation forum. It starts on the 31st of October. So I don't know if trade, and particularly soybeans, are going to be a heavy part of the docket. Then they also stated that they would then come together again at a later date, like into the new year. And I think that terminology, into the new year, is what kind of spooked some investors or some soybean traders into thinking that we're not going to see anything like a deal come through for the rest of the calendar year. And it looks like the market had priced at least some progress being made, and maybe even some purchases being put on the books as a sign of goodwill from China. That may not happen. So actually, in our weekly report, we do talk about the fact that China hasn't bought any soybeans, and whether or not they can actually go the rest of the year without buying any U.S. soybeans. So you might want to check that out, our weekly report out, by subscribing to our reports there. Okay, here's the chart for soybeans. As you can see, a big reduction today in values that, a a big trading range too. It almost reached up to 10.50 in trade and then fell to close at 10 and a quarter or just above 10 and a quarter. Big trading range, big losses today. Took out a bunch of the moving averages, but those moving averages were kind of constricted anyway, so not necessarily a major um, technical breach there. We are getting close now to that 1021 or 1022 support. We want to see that hold, or else this market could take another dip back down towards the $10 area if this continues to get weaker. So, another interesting story that I saw in the on the interwebs today was just about particularly farmers in the northern part of the Midwest, and particularly how there was a co-op that sent out a letter to their clients, to their farm clients, and it essentially, or it stated that each here, I'll read it out to you here. Each season brings its own challenges, and we work together to address them head on. This harvest is no exception, with soybeans presenting the greatest concern. At present, selling a soybean train is nearly impossible, and with the export market essentially at a standstill, we do not know when trading conditions will improve. China is currently sourcing soybeans from South America, and with tariffs in place, it is unclear when they will turn their attention back to US soybeans. Now, as far as I know, I'm quoting this from the article, which was quoting a letter. So take that for what it's worth. But I think that sums up the sentiment in US soybeans right now. It's very difficult on US farmers um, to get soybeans sold, especially in this on the northern states in the Dakotas, where basically that product has to go west to the PNW or Pacific Northwest to service that Asian market. And so it's a very important market for that northern Midwest states, and it is obviously creating some pain. Now, here's a chart. It's interesting because this chart obviously showcases the or this chart showcases the net sales of US soy or of US soybeans to China. As you can see, there is, this is the 5 year average. This green line, this is previous years. The blue line and the red is this year, and the red is not. There is no red. There is no sales. There is no sales yet, and if that, so that's probably why that meeting today may have hit soybeans a little bit harder, because the market was expecting there to be some progress on this, which may have resulted in some soybean sales before the end of the calendar year. And I think that's basically a no, at least until we get into 2026. All right, let's turn our attention to canola here. Canola did follow the rest of the soybean complex lower. We're going to talk about soybean oil here in a second, but just to kind of touch on canola specifically, it is also seeing some weakness. We're still in this pattern of higher or lower highs and lower lows, which is a little bit scary, because that means that now that we've seen this kind of top out, it has tested the 20-day moving average, has failed to move decisively above the 20-day moving average, and now is moving lower. It's even, this little very mild trend line here, it broke that as well. But it could be that we're headed now back towards that $600 a ton level support. We did see it bounce off 610, so there might be some support there, but it looks like it's been trading inside this channel as well, which could bring it down as low as, into the 580s, if that's where we're going to go. We want to keep a close eye on this chart, particularly if you are not well sold, or you do not have enough sold that you feel in the short term, because this is going to hurt. And that's one of the reasons why we advocate for such strong positioning ahead of harvest and into the spring, when prices tend to be high. And that's not and I told you so or anything, but uh, I think we're not the only advisory team or a company that does talk about that. It's a very common practice. We hope that the sales that we make in spring carry us through until this harvest pressure has relieved itself to some degree. So, but what is happening is, this is an article from Reuters today. We have reported previously that there has been some sales of to China from Australia, that China has bought some cargoes. Right now, it looks like they've bought about 6 cargoes, which amounts to about 540,000 tons, which is a pretty big amount. That's about 8% of China's total canola imports from last year. So they're obviously using their newfound friendship with Australia as a way to shore up some of that canola supply that they're going to be missing from Canada, which doesn't bode well for the Canadian canola at this time. We may have to look, or I'm sure we are already looking at other markets for which to sell our canola. Also, and this is completely rumor at this point, so I will deny saying it if asked, although it now will be on the internet forever. But I've been hearing that there is some rumors that the crush plant in Regina is not set to open now into the end of 2025, and it looks like it will push into 2026. There's uh, as far I haven't seen anything on the news wires yet. So again, this is just rumor, but looking at their bid structure for crushed canola, uh, it doesn't even look like January is going to be a viable option for delivery into Regina either. And how I know that is, you look at here's the December crush bids for Camrose, for Clavet, and then Regina has a significant discount to both of those crush plants. Same thing goes for January delivery period, where actually delivery into Camrose it has really good pricing. Delivery into Clavet has pretty good pricing, and then it's just falls off a cliff for the Regina crush plant. Basically, they're saying don't deliver to Regina. We don't want you to lock in contracts for Regina for January either. So who knows how much delay this means? Maybe we'll see something hit the wires in the next couple of days about the delay. But this is unfortunate because we really wanted to see a strong crush presence this year, particularly in the absence of China as an export market for us. So we needed other avenues in which to gobble up the supply of canola. But I mean, there still will be some for this crop year from this crush plant, but just maybe not as much as previously expected. Okay, here is the December soybean oil chart. Now, this may be one of the leaders, particularly in canola, in driving the canola prices down at this point. We've seen, 3 days now of pretty significant losses here in the December or in the soybean oil market. I think some of that has to do with, crude oil specifically. We've seen kind of the same pattern the last 3 days. We've seen reductions in the crude oil market. That has a lot to do with the oil price supply. So even OPEC has announced recently that they're going to increase production, or at least not decrease production as much as originally thought. There is some rumors again about a bit of a supply war, or trying to flood the market in order to particularly Russia to deal with things like sanctions, things like that. But overall, the market is flush with crude oil, or it's becoming more flush with crude oil. I think that is weighing on soybean oil, and in turns, canola and even soybeans to some degree as well. So we're all heavily tied together now. Energy is an important part of the vegetable oil complex. All right, let's get into wheat here. Wheat also slipped this week. There seems to be the last 3 days seems to have really taken a toll on commodities, not just ag commodities, but a lot of other commodities as well. The wheat complex is now kind of pushing back towards those previous lows. Here is spring wheat. It's almost erased all the gains that it's seen. It might come back and test this 565 area as well. Hard red winter is in a similar situation. There's support there just above $5 on the December. So not a great close to the week, but we are coming up on a lot of support levels, and we're going to watch those, see if we can get a bounce off of those, and that might give us some opportunity going forward. All right, if you haven't subscribed to this YouTube channel, please hit the subscribe button. About 75% of you that watch this video is not subscribed to this YouTube channel. So, hey, if you like our content, hit that subscribe button, and have a great weekend. We will see you again next week.